What is going on, guys? Sam here today. I'm going to go over the 15 key rules to trading. They have them on here. You can screenshot them if you like, but I'll go over them really quick. So, the first one is use a stop loss. All right, this is pretty obvious. If you don't use a stop loss, you're going to use emotion to exit your trade, right? So, if you don't have that stop loss set once you're negative 20%, are you really going to exit, or are you going to hope that it's going to go back up? And then you're going to hold that position because you think it's going to go back up, and you're going to end up taking massive losses. And using a stop loss also helps become emotionless in the market. Next one, do not add to a losing position. Okay, doesn't matter. Don't add to one. All right, if you're losing, just wait for your stop loss to be hit. Now, adding to a winning position is what you want to learn to do. Now, everyone adds to a losing position because you average down, right? Enter this at $100. Oh, it's at 80. I buy. Wow, it's on discount. $90 now. Now all it has to do is go up $10. But now if it goes down $10, you're doubling your loss because you doubled up. So yes, it might work sometimes, but the majority of the time, all it takes is that one time that you double up, double up, double up, double up, expecting it to go back up, and your whole portfolio gets railed. All right. Don't add to a losing position. Doesn't matter. Don't do it. Terrible habit to have. Don't risk more than 2% of your trading account. Now, this doesn't mean don't use more than 2% in a trade. It just means that in that trade, what are you risking? How much money are you going in with? Okay, I'm down to lose $30 on this trade. Like, that's what I'm risking on this trade. And don't risk more than 2% because if you do, you're going to be pretty pissed, and it's going to cause your emotions to come out. It's going to affect your future trades, your future trading days if you lose massive percentages of your trading account. So this is to conserve your emotions in the market. Never let a winning position turn to losing position. All right. So this is exactly where you take profit and then set the rest to break even. If it goes below the break even, you're out, and you just look for a re-entry. Simple as that. Just look for a re-entry. Don't worry about, oh, it's going to continue up. Okay, cool. Stop at a break even and then continue up. Catch it up again, okay? Don't let a winning position turn to a losing position because then you just gave away all your gains. Don't do it. Use trailing, take profits to let your winners run. So this maximizes your gains. So when it goes up 100%, you can catch 20%, you can catch 50%, you can catch 100%. So this is great, and you just set the rest at break even. Have a plan, okay? Do not just enter blindly, okay? You need to know why you're entering, where you're setting your stops, where you're setting your take profits, and keep that plan simple, right? The more complicated it is, the harder it's going to be for you to understand. I mean, if you can understand a really complex strategy, go for it. But the simplest strategy is all you need. Market's not that complicated. It's just trends and key levels and stuff like that. Use multiple time frames. This is key. If you only use 1 minute, you're gonna get faked out. If you only use the 5 minute, you're gonna get faked out. Look at the bigger picture. Look at the 15. Look at the hour. See what the trend is. See if it's going up. See if it's going down, and utilize those time frames to confirm that it's going to continue going up or that it's going to go down. Trade with the trend. Trend is your friend. Okay. If buyers are in control, why would you do puts? Why would you favor the sellers if the buyers are already in control? It's already favoring the upside. You always see these massive moves. It could go insane, like 500% up, 500% down. You want to catch that, okay? Yes, it's not going to happen 100% of the time, but if you catch one, literally all it takes is one, and your portfolio will, you know, gain way more than any other trade you've lost on. So do not predict the market, react to it. Okay, this is key. A lot of times people are like, "Oh yeah, it's up here, it's going down." Why? Right? Why is it going down? Oh, because I think it's going to go down. No, don't create images in your mind. Utilize the charts. Okay, read the charts. Okay, it's at a key level. The trend is going down. Here's confirmation. We're entering. I'm reacting to the market. It's all probabilities. There's no guarantee in the market. No matter how good your setup is, there's no guarantee. Okay. Now you got to utilize key levels, right? Now key levels, I went over my previous videos on how to plot them. Very easy to utilize. Utilize these to set your stop losses and your take profits, because this is where other traders are going to be looking to buy and sell at, because previous price action has came down to that level and bounced, so they can, think that it's going to happen again, which it doesn't always happen again, but utilize these to maximize your profit and minimize your stop, okay? Minimize your loss. Don't focus on the money, all right? If you're focused on the money and you only want to make, if you want to only want to make $1 million a year, okay? Trading is not for you. If you only want to make 100K a year, it's not for you. If you want to buy that car, if you want to, pay your rent through trading, nope, not gonna work. Don't trade. Go work your job. Okay. You got to focus on the process of it. If you think about the money, you're gonna get emotional. And you're gonna be like, damn it, I just missed this whole big trade. I'm gonna enter now, and then you take a bunch of trades and you'll lose a ton of money. So this is why you got to focus on your process and create the best plan for you and focus on your strategy, okay? And you have to stick to it. To stick to your strategy, and if you can stick to your strategy and your rules and learn to take emotion out of trading and just do this every day, regardless if you lose a trade or not, you'll be profitable just based on if your strategy works. And if your strategy doesn't work, just change your strategy and then stick to your new strategy and don't go off of that, because once you go off of that, then you're trading blindly and you need to have a good strategy to go off of. Don't be afraid to take a break, okay? A lot of traders think they need to trade every day to make, maximize your gains. You don't, okay? If there's news, if there's, high volatility in the market, just don't be afraid to take a break and not trade for the day or the week. Like, it doesn't matter. Like, all it takes is literally one trade. One trade can make you rich, okay? You can literally take one trade every week and make $1 million a year, okay? It doesn't matter. As long as you can find that one trade, you can be profitable. And review your trades, okay? After the day ends, go back and be like, why did this go profitable? Or why did this stop me out? Why did this not reach my final take profit? And review, okay, I didn't enter at this confirmation. I entered this one. I entered too early. I entered too late. And utilize that for tomorrow. Be like, okay, I gotta be more patient. I need to wait for this confirmation now. Okay, and change your strategy a little bit until it works for you. And every day is gonna be different, so it's not gonna be perfect every day. But every day you just need to review your trades, see what you could have done better, see how you could have taken more profit out of it, see how you could have, you know, stopped out. If you got stopped out too early, be like, okay, I gotta set my stop a little lower, below liquidity, or shoot, I didn't even realize there was this trend. Like, I didn't look on the higher time frame. Look on the higher time frame next time. I risked too much in that trade. Very simple to analyze your trades and benefit yourself as a trader. So these are 15 rules that I personally use as a trader, and I think you can utilize. And yeah, thanks for watching.